I am not asking you for money. I'm presenting you with an opportunity and solving your pain points.
Welcome back, everybody. We are on video 7 in the series. We are here talking about raising capital, how to do a fund specifically.
Yes.
And Veena's given so many amazing nuggets throughout this series. I'm just so thrilled with how this has turned out. And this is so fun. You know, after we do one of these, some of these are long, like an hour almost, and to me, it feels like 5 minutes because it's so interesting, so fun, and so compelling to just be with you. I love your energy. I love your excitement.
Same.
You can feel, Veena, that you really do love doing this, and it's a part of how you just live your life.
Yes.
Right? And so thank you for that.
Absolutely. Thank you for letting me do this. I can't believe I get to do this with this in the background, hanging out with you.
Yeah.
Life is good, man.
You know, we are friends for life from
Forever.
This week out here at Community Camp.
Forever. You can't get rid of me.
Yeah. And we are talking about, on this one, your elevator pitch.
Perfecting the elevator
Get that pitch, right?
Yeah.
Your elevator pitch. And so, Veena, maybe share with everybody what that is and why that is so important. It might be something you've heard before, but when you're talking to people about what you do, and you're talking about getting money for a fund to do deals,
you need an elevator pitch.
Why is an elevator pitch so important, and what's that all about?
Okay. So an elevator pitch is a quick hook to open a conversation with an investor. The biggest mistake that investors or new investors make when they're trying to pitch somebody is, how many times has someone come up to you and gone, "Hey, Jerry, it's so nice to meet you. I have a really great deal in Boise, Idaho, and it has a 17% IRR, and it's a multifamily asset that has 3 years of IO left on the interest at 2.95%. How many are you interested in investing in it?"
You're just like, whoa, oh, yeah.
Right. They throw up on you.
Yeah.
Like, they word vomit all of the details, right? And then sometimes they'll go even further. They'll be like, "And there's value add, and we're going to spend $15,000 a door, and we're going to get $200 in NOI boost a month because the comps in the area are $400 above where we are, and we can definitely operate it better than them. And I love Boise because there's all these things happening here." And you're like,
whoa, slow down.
Okay, you did do it in like 90 seconds.
Yeah.
But you didn't really say anything meaningful to me. And the misconception is that an elevator pitch should be a short, concise speech or
like 30
dialogue. Yeah, 30, 60, 90 seconds, right? It should be the amount of time that you're in an elevator. That's why it's called an elevator pitch, to go from the ground floor all the way to the top, or the top floor down. And people think you want to convey all of the things that you have to say. That's not what an elevator pitch is. An elevator pitch should be designed to intrigue follow-up questions.
Did you guys catch that? That's really good.
Right?
It should intrigue them
enough to ask a question back. Because that's
to your ideal avatar.
To your ideal avatar, or to any avatar, really, right? I put together groups of passive investors to gain double-digit returns. Sometimes I'll say tax-efficient double-digit returns.
So you throw that tax benefit in
by
there.
investing in multifamily assets or apartment complexes.
Wow.
That's all I say.
Say it again. Say it again.
Okay,
can everybody listening, can they pirate that?
They should.
Okay. As long as that's what you do.
I mean, if that's what you do, but you should take it and mold it to whatever it is you do.
Say it again, though.
So, okay, I put together groups of passive investors.
Let me stop you as you go. I put together groups because you're pooling funds, right? You're pulling investors with chunks of money into a fund.
Right.
Okay. But you're saying this in a way to where anybody understands what you're saying.
Right.
Yeah.
Right. You want the non-college version of everything I say, right? That's what you told me before I came.
Yeah, because I'm sure you have a way to say that where everyone's going to be looking at you going, what?
Yeah.
But say it again. Okay. So sorry.
I put together groups of passive investors, right? And I say passive investors because I want them to know you don't have to do anything. You can be passive.
Put together groups of passive investors. So you're making sure that it's passive, right?
Yes.
Because the person you're talking to does not want to go, change the toilet.
No, and they don't want to deal with termites, tenants, or toilets. Like that's not what they're looking for.
Okay, so passive is a keyword
Passive is a keyword.
Passive investors.
Investor is a keyword, right? Because you want them to know you have to write a check, right? To get double-digit returns.
Which is 10% or higher.
10% or higher, right, exactly. Double digits, 2 digits. And in most markets, a 10% return is phenomenal return.
Yeah.
Right. And then sometimes I'll say like tax efficiently, or I'll add tax efficiency in there, especially depending on the setting. Or if I kind of have an idea of what they already do, I might throw it in there. And it doesn't hurt to say it.
And again, if you know your avatar, so when you say that, you know your avatar. So when they hear tax efficient,
they're like,
yeah. Now, someone who isn't your avatar, they're going to be like, tax efficient? I don't even know what does that mean? You pay your taxes on time, you know?
Right.
So, right, you're
exactly
speaking
right.
to your avatar.
Yes.
Okay, so tax efficient.
Yeah. So double-digit tax efficient returns are by investing in multifamily assets or apartment complexes.
And now you're identifying your key asset that you specialize in.
Yes.
Wow.
Yeah. So if you
said so much in so
one
few
sentence, yes. And so what happens then is exactly what happened with the guy at Home Depot. He goes, double-digit returns?
Tell me more.
Passive investors,
That's
tell me more.
Yeah.
Right? And so when you say, tell me more, I go, oh, I'm glad you asked. And then I'm going to go into the next short bit that I have. Right? So the elevator pitch is less than 30 seconds. The shorter is better.
Because if it's not your ideal customer, it's going to go right over their head.
And they're not going to care.
And you
don't want to waste time.
did just pitch them for 20 minutes on something they don't even care about.
And you don't want to waste time doing it.
Yeah.
Right? Like I feel like the theme of this weekend has been like how to filter out the no's.
It's so important. You cannot.
It is.
Yeah. Remember we talked about it with deal analysis?
Yes.
Like how do I
filter
how do I filter out? Like, do the most important thing first. And if we pass that gate, right, go to the next one.
Right.
So I'm excited to hear step 2, phase 2 of this.
Yeah. So then phase 2 is, tell me more. Oh, I'm glad you asked. We target assets in Texas, Florida, Georgia, North Carolina, South Carolina, Arizona. We like those markets in the Sun Belt because they've seen massive growth. Our typical asset will get between a 12 and 15% IRR. Or if I'm talking to someone that I'm not sure their sophistication level, I might say like a
return.
Yeah, 14 to 16% annualized return.
And they know what that means.
Yeah. And most people know what that means. And if they're accredited, they definitely do.
So you say the market you're in and the typical returns you get in your history.
Yes. And I might even throw in a case study. Again, it depends situationally how much I share, how much I don't. But I might say, for example, one of the best deals we've exited, we've got a 46% return.
And are you allowed to say those numbers if they're actual facts?
They're true, yeah. And so the question new people are going to say is like, oh, but I don't have those things, right? So then what you say changes slightly. Instead of saying, this is what we have bought in our portfolio, you say, we target these types of assets.
Yeah, it's like I tell new wholesalers and flippers, I say, when you're talking to people, say, I plan on doing 10 deals this year.
Yes. Yeah. Right? It's a very small nuance.
But it's not dishonest.
No, it's not. But it communicates something about where you're going.
Yeah.
And that's the most important thing.
Right.
Right. So, okay, let's talk about what would your elevator pitch be to your investor avatar now?
Oh,
let's just put you right on the spot.
Yeah.
Hi, Jerry.
Hi.
Good to see you.
Good to see you too.
Here on the island. We're here at the same time of year.
Yeah.
Wow.
Yeah, it's great that you live here. I'm so excited to have you as a neighbor.
Yeah. What do you do?
Real estate by chance?
No, that's not what you do.
Oh, shoot.
That's not what he does.
I'm an expert in hotels.
No. This is It's like you weren't here for the whole entire call.
I have...
We'll work on this. Okay. Hey, Jerry. Hey, neighbor. What do you do?
I have a fund that brings together. That sounds good, right?
Yeah,
I have a fund that brings together passive investors who are looking for super awesome, amazing tax advantages on steroids.
Oh.
By investing in hotels here in Puerto Rico.
Whoa, that's really cool. What do you mean by super amazing, awesome tax returns? I mean, we're here in Puerto Rico because we get super amazing tax benefits.
Well, I know that you're here for tax advantages. And so I don't know if you know this, but there are additional amazing tax benefits if you also invest in real estate, specifically in hotels here on the island.
Really? Is that like just for Puerto Rico or is it for everywhere? Or?
For anyone. It's separate from the tax incentives that you're currently doing. So you don't even have to live in Puerto Rico to get these advantages.
So I can juice my tax efficiency even more by investing in hotel real estate?
Even more.
Can anyone invest?
Yes. Can they?
If you're accredited.
If you're accredited.
Yeah.
Oh, yeah, if you're accredited.
So, anyone that's accredited.
Anyone that's
sure.
accredited.
Oh, amazing. How can I see like what your deals are, what you're working on?
Well, I have a deal right now in the works that's
Amazing.
almost ready to open, and we're acquiring more hotels. Would love to show you more about our fund and what we do.
Amazing. How can I do that? Send me somewhere.
My website?
Yeah.
Yeah.
Send me somewhere.
I'll send you to my website, or do I give them the OM then at that point?
No.
No,
Okay, so now, a couple things. So, I like to use...
Leave a comment if you're like, Jerry, you so botched that up. Anybody could have done that better.
You just go to my website, vivefunds.com. We have an investor portal. You can always see all of our deals there. Anytime we have a new deal, you'll be able to see it. It'll send you an email notification. And then anytime you have any questions, we're neighbors. Come on over. We'll hang out and we'll talk about whatever questions you have. And also, if you're looking at other deals and you want me to look at them and give you any feedback, I'm happy to do that.
Okay.
Yeah,
and
use
you're
me as a
you're
resource.
accepting funds now? Money in your fund now?
So right now, I'm about to put out my paperwork. Obviously, you need paperwork first before you wire any funds. Even though you literally know where I live, make sure you don't send funds to anybody without proper documentation. I'll send you that documentation, review it, have your attorney review it, have your business advisors review it. And then if you decide it's the right investment for you, you'll have wire instructions so you can wire your funds over, and then you just sit back and relax. Super easy.
Yeah. So. That was awesome.
Right?
Wow. Yeah, because you have to have a call to action, right? You have to have
the
next
a call.
thing you need to do.
Where can you go, right?
Yeah.
And I think that is also the other thing. Did you notice in that I never told you once what your return expectations are? I never told you what your IRR is. I never told you about your equity multiple. I didn't tell you about your average annualized return.
Because that doesn't really matter.
It doesn't matter
at this point, right?
It doesn't matter.
they're gonna go through things and maybe they've got a question then, right?
You have to kind of read the room there a little bit, right? Like, so what does the other person need to hear? Are you connecting? Are you vibing? Are they more serious and stoic, right? Like, I'm changing my language. I'm changing the way I talk, the things I joke about, right? Like I said, drop off a briefcase full of unmarked bills.
Yeah.
If I'm talking to someone who's very stuffy, like in a full button-down suit, I wouldn't say that. I'd be like, I'm glad you asked. We have a whole entire process, and we will receipt your funds once we get them, because I'm going to show them the serious side. And that is how you're talking to your investor avatar, not just to who the general avatar is, but you're talking to their personality too.
It's interesting, Veena. I'm realizing now how critical it is for me to get my fund, because I've had conversations about it, but then there's no CTA, right? People are like, wow, that's really cool.
Okay, bye.
Yeah.
See you next weekend.
Thanks for coming to my barbecue.
Right. So you need to have somewhere
instead of
for them to go.
Yeah. This...
Yep.
We're raising money right this minute, and you can get involved.
Yes. Well, and even when you're not raising money, what you say is, we always put our projects out to our VIP investors. I would be happy to add you to my list. You'll be the first to know when we have an opportunity.
Because you talked about creating a CRM of potential investors and tracking them, knowing who they are, what they do.
You have a call to action, and you have somewhere for them to go. And the one thing I want to say, especially if you're new, and we were talking a little bit earlier about how it's uncomfortable to talk about money, to ask for money, right?
Yeah.
You said this on stage, I think, that growth happens in discomfort.
Yes.
You don't grow when you're comfortable, right? And the more you do it, the easier it gets. But the thing that really helped for me, and it was like a really big mindset shift for me to think about it this way, is I am not asking you for money. I'm presenting you with an opportunity and solving your pain points. I have a responsibility to help the people I know, care, love, have relationships with, to help them achieve their goals and their financial freedom. And if I know a really great way to do that, it's not abundant mindset to keep it to myself.
Right. Yeah, we did touch on this a bit.
Right?
Yeah.
So you're presenting an opportunity.
And I would say too, the more you believe in what you're doing, your fund and what it does,
the easier it is.
Yeah, I mean, there's no way around when someone is around Veena Jetti and she's talking about her fund, where you can't feel how compelling your investment is because you believe wholeheartedly in that investment.
With like most of our net worth.
Yeah. So I think to recap, tell me if I got this right, Veena. Your elevator pitch, it needs to be so succinct that it qualifies or disqualifies the person.
Short and sweet.
It's gonna, if it's done right, it's gonna evoke in the right customer. Tell me more about that.
Yes.
What is that you're doing? That gives you, step 2 of your elevator pitch, which is now a little deeper dive, which might be about, well, here's what kind of returns we typically get, right? So it's a little bit more, but again, it's also short enough to where, okay, well, what's the next step? So we do things in steps and we only progress people. A funnel only works like a funnel because a lot come in and a few come out, and you want to design that so that you're quickly getting to your ideal person.
Exactly. And I'll tell you too, I have been raising capital for 1,000,000 years. So that's why I'm comfortable pitching something that I've never invested in a hotel in Puerto Rico. Yeah. I've never raised capital for it, but I could generally pitch it because I've just done it so many times. So this is a muscle. Yeah. You have to practice it. When I first started, I would practice in the shower. I'd practice on my way driving to my appointment, whatever I was doing. I would be talking to myself. In my sleep, I would practice, like literally all the time. All I was doing was practicing. Every person I met, I would practice it on them. Yeah. Because the stakes are so low when you're like at the grocery store and you're like, oh, hey, are the watermelons good? And they're like, oh, yeah, amazing. I'm Veena. What do you do? And then, they hate you because they're trying to get in and out quickly. Yeah. But you're like, I just need you to be here for like 30 seconds so I can practice something on
So
you.
True, though. I mean, one thing I tell people when they're first starting out in real estate and they're calling sellers is call sellers in another market that you don't do. Because if you screw it up, you hang up the phone, whatever, it doesn't matter. Yep. You're just getting practice, right?
Practice.
Yeah, get the reps in. That's the thing. So this is no different.
Yep.
Raising money is no different than anything else. You put the reps in, you're going to get better and better and more.
You'll get results. You will get results.
Well, guys, thank you so much for being here on this video. A couple things. Remember, we've got the playlist link where you can watch all of these videos. Be sure to check out Veena, get in her world, join her community. She's doing so good out there, bringing awareness, teaching people how to do this. I'm so grateful for you, Veena. Thank you for coming on the channel here and doing this. Guys, leave a comment. Let us know what you're learning, what you're getting from this. I'm sure Veena would be willing to come back on and do maybe some live Zooms or some follow-ups. We can compile questions maybe.
That would be awesome.
Would you be willing to do that?
Yeah.
Yeah, maybe a Q&A or whatever. That would be really powerful. But guys, thank you so much, and we'll see you on the next video.